All right, let's cut to the chase. There's something massive brewing for XRP, and I can almost guarantee Wall Street hopes you never find out. Picture this: you wake up one morning, grab your cup of coffee, and the price of XRP isn't just moving, it's being set. Not by random hype, but by the same strategy that's flipped markets before. And trust me, every single time, regular investors either get completely left behind or they're the ones celebrating on the other side. Now, here's what's wild: this isn't just some what if scenario. We've seen real price sets before. I got the receipts, I got the chart, and I'm about to show you what's happening with XRP right now because it's screaming for attention and no one's giving it the attention it deserves. But real talk for a second. I checked the numbers, and 72.6% of you who watch these videos aren't even subscribed. Come on. If you're here for the inside scoop, make sure you hit that subscribe button. It's free. And smash that thumbs up like you've been doing for me for the past couple of days. It tells YouTube we mean business, and it gets the info out there to the people who actually care. This is the Bullwinkle blueprint. So stick with me because in the next few minutes, I'm pulling back the curtain on what Wall Street doesn't want you to know about XRP, the chart setups nobody's talking about, and just how close we are to something big. So without further ado, let's dive on in. Bitcoin coming in at $108,176. It's currently down 0.77%. Ethereum coming in at 2,523. It's currently down about 1%. And XRP, it's holding down a number 4 spot, coming in at $2.22. Not too shabby if you ask me. Total cryptocurrency market cap, $3.33 trillion. Now let's jump into this, folks. You ever wonder how XRP could have its price set? Not by the market, but by real people. Imagine a world where giant banks or even governments say XRP will always be worth, insert the price, 50 bucks, 100 bucks, 200 bucks. Boom, it's done. Sounds wild, right? Well, guess what? It's not. This video is going to take you through history, economics, and blockchain magic to show you how price setting has happened before and how XRP might be next. So, price setting, what does it mean? It means a trusted authority, a government, cartel, institution, fixes an asset's value and backs it with action. Why does it matter? Because it brings stability, predictability, and trust, which are crucial for global finance. If we come over to the Federal Reserve history page and we look what went down in 1971, the gold standard, $35 an ounce. For decades, the US pegged the dollar to $35 per ounce of gold. What did this do? It provided stability. But once Nixon ended it in 1971, gold's price exploded from $35 to over $800 an ounce in the 70s. It was like removing the train wheels. Markets freaked out because the anchor was gone. You can see it right here. With inflation on the rise and a gold run looming, President Richard Nixon's team enacted a plan that ended dollar convertibility to gold and implemented wage and price controls, which soon brought an end to the Bretton Woods system. States in here, President Richard Nixon's actions in 1971 to end the dollar convertibility to gold and implement a wage/price controls were intended to address the international dilemma of a looming gold run and the domestic problem of inflation. Interesting, right? Well, and what we were looking at. So since October 17th, 1983, the Hong Kong dollar has been tightly pegged to the US dollar at 7.8 HKD equals 1 USD. During Black Saturday, September 1983, it dipped to 9.6 HKD. But the HKMA, that's the Hong Kong Monetary Authority, they instantly stepped in and they restored the peg. This is like a playground seesaw. If it tips, the teacher steps in to bounce itself out. You can see right here on the screen, a Hong Kong dollar was pegged to the US dollar on October 17th, 1983. The Hong Kong dollar was originally set at a rate of 7.8 per 1 US dollar, although it has been allowed to trade between 7.75 and 7.85 per the US dollar since 2025. We move on over to this. From the Federal Reserve history page again, the oil shock of 1973 to 1974. OPEC, they cut the supply in 1973, doubling crude prices from $2.90 all the way up to $11.65 a barrel by January 1974. Essentially, oil producers, they set their own price floors, causing shocks worldwide. So pretty much they turned oil into a must buy at any cost, like concert tickets sold out and only running through one app. Interesting, right? We come over to this wiki page, linked exchange rate systems in Hong Kong. It says a link exchange rate system is a type of exchange rate regime that pegs the exchange rate of one currency to another. It is the exchange rate system implemented in Hong Kong to stabilize the exchange rate between the Hong Kong dollar and the United States dollar. Unlike a fixed exchange rate system, the government or central bank does not actively interfere in the foreign exchange market by controlling supply and demand of the currency in order to influence the exchange rate. We come to this from the World Economic Forum, which was just published in March of this year. Stablecoin surge. Here's why reserve-backed cryptocurrencies are on the rise. So we talk about digital price setting, stable coins, and tokenized gold. Always traded at $1, backed by real reserves, no guesswork. USD tethered about $158 billion market cap and $62 billion in daily volume. Total stablecoin transfers last year hit over $27 trillion, surpassing both Visa and MasterCard combined together. So, imagine this for a second. Imagine XRP like a stablecoin, but instead of $1, it's pegged at a higher value for bigger payment, larger settlements. If banks/governments require XRP for cross-border transactions and agree to support a set price, market volatility then drops. It's like the gold standard plus the stable coins plus OPEC style coordination all rolled into one. Businesses would plan costs months ahead, budgeting here like clockwork. So a little data here. Let's build the stakes up. Gold, peg drop, price soared 20x in a few years. Oil, price quadrupled in 3 months during the embargo. Stablecoins, over 27 trillion transfer volume. Proves that digital pegs can work at a large scale. This shows how powerful and impactful price settings can be and how they can be instantly here, folks. XRP price set could be equivalent to global finance 2.0. Why it matters? Less volatility equals more trust in the markets. Faster settlement equals cheaper fees. Budgetable, just like business plans and investments today. If XRP gets its own stable yet high price floor, it becomes the backbone of the global payments system. We've seen this done in the past. You just seen all of these examples. So now you see how a price setting shaped money, oil, and even dollars in your pocket via stablecoins. XRP could follow this exact same playbook, backed by the global players. That doesn't get you excited about what's next. I don't know what will. Smash that like button, subscribe, and dive into the comments. What price pegs do you think that XRP deserves? Hopefully you enjoyed. Hopefully you learned something. If you like the content, you know what to do. I'm going to leave it right there. I'll catch everyone a little bit later today. Enjoy your Saturday morning. See you for now.